You guys have been asking for it, and here it is, the top 5 stocks that you must put into your portfolio for February 2025. Don't worry about subscribing, tapping the like button, looking for the coaching and Discord link. We're going to get into the top 5 stocks right now. But before we do that, huge announcement. Today is my free masterclass webinar, Friday, January 31st. Today, in just a few short hours, 8 p.m. Eastern Time, 5 p.m. Pacific. Link to register is below. Do not miss the opportunity. Huge announcement, Q&A. You guys will learn more in that 1 hour with me than you will learn anywhere else. That's what every student has said. Register below, and I will see you there. Let's dive into my top 5 stocks for February. Number 5, I've talked about this stock before. It is Payoneer, P-A-Y-O, a leader player in the digital payment solution space, specializing in providing innovative technology driven by services that simplify transactions for businesses and consumers alike. With focus on streamlining payment processes, Payoneer has developed a robust platform that integrates payment processing, fraud prevention, and customer analytics, catering to a diverse client base that includes e-commerce, retail, and service industries. The company has seen remarkable growth, reporting 120% increase in transaction volume over the past year and a 90% expansion in its merchant base. This growth can be attributed to Payoneer's commitment to enhancing user experience through cutting-edge technology, strong partnerships, and a proactive approach to addressing the evolving needs of the digital economy. As the global digital payment market is expected to reach $10 trillion by 2026, Payoneer is poised to capture significant market share, buoyed by its innovative solutions and strategic positioning. Let's take a look at Payoneer, look at their balance sheet, and see exactly what I'm talking about. So you can see a big jump here on Payoneer on November 4th. That's when the election was. This stock has not come back down since, unlike most of the stock market pulling back at some point or another. Cyclicals, fintechs, and financial stocks have done very well. Let's look at Payoneer having a $3.89 billion market cap. We look at their financials, and we're going to divide 940 million, which is almost a billion. So what we're going to do is we're going to do 3.89 divided by 1, giving us just under a 4 price to sales, which is very strong. Almost a billion in trailing 12-month revenue, 250 million a quarter. Operating income is also good. Pre-tax income good. Net income is profitable. This is very good. EBITDA is also very strong. We look at their balance sheet. They are just in the right position to cover liabilities with their assets, and they're sitting on $500 million in cash. So it's a fairly strong balance sheet. We also look at the cash flow, $189 million in trailing 12-month cash from operating activities, $180 million in free cash flow per quarter, about $50 million in each, respectively. Very strong stock. Getting in now is good because there's so much upside, which is why this stock has made the top 5 for February. Add some Payoneer to your portfolio, and remember to keep it to 5% or 10%, no more. The number 4 stock to add to your portfolio for February 2025 is Grab Holdings. Grab Holdings, often referred to simply as Grab, is a leading technology company based in Southeast Asia that offers a diverse range of services, including ride-hailing, food delivery, and digital payments. Founded in 2012, Grab has rapidly expanded its footprint across the region, operating in over 400 cities and boasting user base of more than 31 million active users as of 2022. The company's revenue growth has been impressive, with a reported 64% year-over-year increase in its financial services segment, indicating strong demand for its e-wallet and payment solutions. Additionally, Grab's strategic partnerships and investments in technology such as AI and machine learning position it well to capture a larger share of Southeast Asia's exploding digital economy, which is projected to reach $300 billion by 2025. With its commitment to innovation and customer-centric services, Grab stands out as a formidable player in the competitive landscape of Southeast Asia's tech market. It's also expanding in the West Coast, in the Los Angeles area, and they are continuing to grow year over year. Let's take a look at Grab on the chart. So you can see Grab has shot up in October, November, and again near the end of November, and then it started selling off. It's a very strong buy in the 460 range or lower. I think it's still pretty good in the $5 range, but I would like to get in closer to the bottom, so $4 to $4.50 would be good. But overall, this is a good buy. 18 billion market cap. We're going to go ahead and look at the financials. 18 billion divided by their income statement of 269. So 18 divided by 269. We'll show you right here. 18 divided by 2.69, giving us a price to sales of 669. Apple is around 10 or 11. Very strong, only slightly above SoFi's by about 1. So this is a very strong price to sales. Total revenue, 3 billion, 716 million a quarter. Gross profit is also good, 1.12 billion, 307 million for the quarter. Operating income is 16 million for the quarter. Pre-tax income, 49 million. Net income, 26 million. They broke profitability. EBITDA is also good at 52 million. Balance sheet shows they have more than enough assets to cover, including liabilities, and they're sitting on $5.33 billion in cash. This is extremely strong. I mean, very strong balance sheet. Cash flow, 378 million a quarter for operating income, and free cash flow, 355 million. And respectively, for the trailing 12 month, 741 million for cash from operating activities and 665 million in free cash flow. Be sure to add some position to your account in Grab Holdings. This stock has high potential for 2025 and 2026 and going forward. I always tell my students in Discord, this is very important to understand the stock market and understand which stocks have growth potential and how to limit your position size to limit risk while maintaining good profitability. If you guys are interested in joining my Discord training course and my one-on-one coaching so I can help you grow, you can sign up at any time at investorcorey.com. Links in the information box below, and I look forward to seeing you very soon. Just click on training, watch the video, and book a call with my team and I so that I can get you on the right track, as it's what drives me every single day. The number 3 stock to add to your portfolio is New Holdings. New Holdings is a pioneering fintech company based in Brazil, which is rapidly reshaping the financial landscape in Latin America with its innovative digital banking solution. By leveraging cutting-edge technology, New Holdings offers a range of services including credit cards, personal loans, payment solutions, and catering to the unbanked and underbanked populations. As of the latest reports, the company has amassed over 70 million customers, demonstrating a staggering 85% year-over-year growth in user acquisition. This impressive trajectory is fueled by New's commitment to providing transparent, user-friendly financial products and its efficient cost structure, which has led to a significant increase in profitability. With a market expansion strategy and a strong emphasis on customer experience, New Holdings is well positioned to capture a larger share of the exploding fintech market in Latin America, which is projected to reach 150 billion by 2025, making this stock a must-buy for 2025. And what better time than now? Let's take a look at New Holdings on the chart, and let's look at the balance sheet. New Holdings is actually in a dip right now. I only wish I had purchased and added more shares down here at $10, and I'm sure you feel the exact same way. But it's okay. Earnings is coming up on February 20th, so now is the time to get in. As you can see, they have been beating the earnings estimate over and over again. Well, at least 2 times in a row. But during their previous earnings where they missed, they only missed on revenue and EPS less than a penny. So it's not a big deal. Very good company. Wish I'd gotten in sooner, but we're still below this dip. If this stock was to dip any further down to, say, 1280, 1290, below 13, I'd want to add even more. Dollar cost average, they have a market cap of 63.83 billion, which is high. 63.83 divided by 9.80 gives us a 6.5 price to sales, right in there with Grab and SoFi and all of these strong stocks. In my opinion, New Holdings could potentially give more of a return in 2025 than even SoFi. When we look at their balance sheet, 2.62 billion in total revenue per quarter, insane 10 billion per year trailing 12 month. Gross profit 178 billion, almost 7 billion trailing 12 month. Operating income 723 million, 2.6 billion trailing 12 month. Pre-tax income pretty much the same as operating income. Net income 553 million, 1.78 billion. EBITDA is also very strong at 743 million. We look at the balance sheet. They have enough assets to cover liabilities, and they have $6.5 billion in cash. This is another very strong balance sheet, and this is a lost art when looking at stocks that are going to grow your portfolio. Like I said, I teach my students this in the Discord all the time. Balance sheet, very important. Negative net debt means exponential amounts of cash. 7 billion, 6.5 billion in cash. cash. New Holdings has enough cash to sustain themselves. Let's look at cash flow. Operation activities, $2.21 billion a quarter, trailing 12-month, $12.38 billion. It's insane. This is a lot of cash flow. Very strong company. Add it to your portfolio for February 2025. Let's take a look at the number 2 stock to add to your portfolio right now. And it does pose some inherent risk more than others on this list potentially, but it has so much room to grow. Number 2, Intel. Intel is a global leader in semiconductor manufacturing. It's at the forefront of innovation in the technology sector, producing critical components for computing, data centers, and artificial intelligence. In its latest earnings report, Intel showcased a significant turnaround. This is key, with revenue reaching $19.6 billion, a remarkable 10% increase compared to the previous quarter, driven by robust demand for its data center products and advancements in its AI capabilities. The company's strategic focus on expanding its foundry services and the launch of its cutting-edge 13th generation core processors has positioned it well in a competitive landscape. Additionally, Intel's investments in research and development alongside its commitment to sustainable practices underscore its potential for long-term growth. With the semiconductor market projected to grow to $1 trillion by 2030, Intel's proactive initiatives and strong financial performance highlight its solid trajectory. Now, I've spoken about Intel before. If there's any time to enter Intel, now is the time, even if it's risky. If there was ever a chance, this is the time to do it. Let's take a look at the chart. Looking at Intel, you can see there's been a lot of sell-offs with a lot of missed earnings, a lot of lowered guidance for 2024, then 2025, and now they have found and basically struck some gold. Look at this. They've got a beat on the earnings estimate EPS of 10% and over 3% on revenue, turning things around. And in my Discord, we have leap options that I put out on a trade alert. So that's going to print, likely to print between now and July. We can see the stock did very well. It went up, only up really, and closed above the 100-day on earnings. Very promising and good news for Intel, and definitely a short-term morale boost. Now we can see that they have an 86 billion market cap, and their trailing 12-month is 54 billion. 86 divided by 54 is less than 2. 86 divided by 54, 1.59. This is an insane price to sales. If this shows us anything that we've learned over time on these YouTube videos, that I've been showing you how to do this, it indicates that there's potential for at least a 4x, meaning Intel should be about $80 to $100 based on revenue if they can get their debt down and grow their profit margins. So there's potentially a 4x return here at Intel. Is that going to happen? We don't know for sure, but it is definitely likely. Let's take a look at the balance sheet. The total revenue, 13 billion, 54 billion. Operating income is negative 3 billion, negative 373. So their operating income is suffering. Pre-tax income, negative 9, negative 902 in the trailing 12 months. Net income, negative 16, negative 15. So not too good in quarter 3, but it's not encompassing the most recent earnings. So we can't go over that. The most recent earnings were better. Their EBITDA is also improved. So it's going to be better as well. When we look at the balance sheet, total assets cover liabilities, although they do have some net debt, but this is the previous quarter's earnings. This is not the one they just reported. So it's gotten a lot better. Cash flow, granted, the cash flow here is not from the most current earnings, but it was even better. And you can see here, cash from operating activities is very good. This is the chance to get into Intel before the potential big move, which is a very strong likelihood. Very strong. Things are looking good for Intel now. This earnings is indicative of what's likely to happen in the future. This is the time to add Intel to your portfolio. The number 1 stock to add to your portfolio for February 2025, and again, now is the time to do it, none other than AMD. AMD has established itself as a formidable competitor in the semiconductor industry, renowned for its high-performance computing and graphics solutions. In its latest earnings reports, AMD revealed a striking revenue increase of 18% year over year, totaling $5.6 billion, bolstered by surging demand for its Ryzen processors and its EPYC server chips, which have gained substantial traction in the data center markets. Analysts are optimistic optimistic about AMD's future with a consensus of a buy rating and a target price that suggests a potential upside of over 50%. Some analysts as high as $220 for 2025. The average rate is around $170 to $190. Additionally, the company is poised for continued growth as it expands its portfolio into artificial intelligence and machine learning applications, further solidifying its market position. With the global semiconductor market expected to grow significantly, AMD's innovative products and strategic investments in a technology promise of robust growth trajectory. AMD has been beaten down quite a bit, but it has such an immense upside. Remember, it's down, it's on the bottom, and we buy at the bottom. If there is ever a time to get an AMD, this is the time to do it right now. Let me show you guys on the chart and show you the financial statements, balance sheet, and go over some financials of AMD. You can see AMD has gap filled down. I created a little line here, or drew it on the chart a couple of days ago, and AMD is following it very nicely, and I estimate that it's going to make its way back up to 122, 123 for earnings or higher. The stock has been beaten down, which is the time to get into a stock. Look at all this beautiful upside. If we go to the 4-hour chart, you'll see this is the perfect time. Anywhere down in here in the 100 to 110 range, very close to where it's at, is the floor. It is the time to get in and hold long term. Very good growth potential for AMD going forward in the future. They have a market cap of 192.89 billion. If we look at the trailing 12 month, 189 divided by 24.30, we'll do that right now, divided by 24.3, we can see that the price to sales is 7.7, still 4 points below Apple's. So very good. Trailing 12 month, 24 billion, 6 billion a quarter. Gross profit, 3 billion, 10 billion. Operating income, 710 million, 1.43 billion in the trailing 12 month. Pre-tax, 737 million, 1.46 on the pre-tax. Net income, 771, 183. EBITDA, 150 and 464 billion. Very strong on EBITDA and net income. We look at the balance sheet. They have total assets to cover liabilities quite easily. Net debt, 2.31 billion. 2 billion in cash, and they have enough assets to cover their liabilities 4 or 5 times over, 6 times over, with over 2 billion in cash. This, my friends, is a perfect, damn near perfect balance sheet. Let's go over and look at cash flow. 628 million in the recent quarter, 2.12 billion in the trailing 12 month. So let's look at the free cash flow. 496 million the recent quarter and 1.56 billion in the trailing 12 month. Cash from operating activities, 628 million in the recent quarter, 2.12 billion in the trailing 12 month. This is the best time to get into AMD. I'm telling you, this is the #1 pick twice now for a reason. AMD is what I've been telling my students to add into their position in their portfolios. Leap options, shares. Right now, if there ever is a time to buy, no guarantee, but if there's ever a time to buy, this would be that time. This has been the top 5 stocks to add to your portfolio for February 2025. Comment below if you want to see another top stocks video before we get into February, if you can't get enough of these videos. Don't forget, guys, my free masterclass webinar today in just a few hours, very limited spots, 8 p.m. Eastern Time, 5 p.m. Pacific. Link to register is below. Like I said, limited spots, don't miss out. Huge announcement. All my students say they learn more in the hour they spend with me than anywhere else. I look forward to seeing you guys in the webinar, and I'll catch you guys on the next upload. Take care of yourselves.